This is Apple's one-year overview reading for 2023. It's currently October 18th, 2022, 9:15 p.m. Eastern Time. So the overall theme and behavior, we have a merger or an agreement between two leaders, like a significant agreement or decision between two leaders. Either that or a merger or acquisition of some kind that's highlighted here in 2023, and it's crossed with out of a decline. There's a significant move from the bottom of a range all the way to the top of a range. I was able to deduce some extra information by taking a look at the 10-year and 2022. So on the 10-year, 2023, we've got three pokes through the same price level, followed by a sharp decline after that third poke. However, in 2020, on the 2022 1 year, we've already got this sorrow card as the high. So that sense to me that this price level right here is likely where the three pokes take place in 2023. It's interesting also to note that we have the Sun card ahead of the sorrow card, the Sun card, and for 2023 we have the Sun card at the high, which would sit well with what I see happening, which is that we have a year's high here in the end of March. So each of these cluster of four cards represents a month. Also outlined in the book Tarot for Trading, which you can get on our website tarotfortraders.com, or you can get it on Amazon as well. I think it's I don't think it is on Kindle as well. That's another way you can support the channel, my friends, is by buying the book. So what I think happens is we've got a high here in March, and it's likely the same high here. So we rally. I mean, when you look at the 2022, we have a low in November, and then we rally pretty high to a high for the year in the end of December, but that may end up being a little bit further. It might not be in December, it might end up being a little further out. It depends on how high we are, but this is going to be the price level roughly. Sorry. This is going to be roughly the price level, like between these for the high in 2023. Behavior around the low, we have a rally. This is very bearish, guys. We have a rally along a rally out of the low that offers an opportunity to open up a short position, meaning that we probably see we likely see a lower low in 2024. Also, that would go with the 2024 reading, where we have unicursal, so a significant decline to a low correlator. So there's a 10-year low in here in 2024, and it looks like we move pretty high out of that low, push to the upper end of a range. Either that, or we push the upper end of a range and then we fall. Matter of fact, it's probably both. Upper end of a range. Okay, no, so we fall out of 2023 into a low in 2024, and then we push the upper end of a range higher in 2024 as well. Probably come to a resistance here in 2025. So in any case, this is pretty holding pretty true. So we've got a high here. In early January, we have a fast sudden move higher, marking the a fast sudden move higher easily missed and correlates to a move higher from the bottom of the range to the top of the range out of a decline. From the January high, there's a decline two and through a support level, meaning another support level, and then we rotate sideways along it. There's a 3 pokes through the same price level. There's that sorrow card again. Interesting. 3 pokes through the same price level. And then we decline pretty hard from the 3rd poke. And then it looks like there's the way the technical's set up in late January-ish, is that it looks like we're going to break out through this critical support resistance level on at least a 1-month chart, probably on a year-to-date chart. Instead, we decline, even though people were really expecting that. We fail and we decline through key support on at least a 1 month. Out of that decline in February, there's another move from the bottom of a range to the top of a range. A significant reversal in February that'll stand out on a year-to-date chart, or on a 1-year chart, I should say. And it looks like we decline out of January into February, and there's a low there in January, February. From the low in January, February, from the low in February, we push really high. There's a move to a distant resistance, and there's a fake out there at that distant resistance. That distant resistance is we see at a high for February, and there's a fake out. It'll stand out on a 1-year chart, an intentional fake out or shakeout. So technicals will really lead us to believe certain thing, and we'll see the opposite transpire in actuality. And then late in February, we have erratic behavior back and forth through the same price level, and we revisit a crest in the midst of that erratic behavior back and forth that was recently a past opportunity. And by recently, I mean within like a 3-month period. There's a lot of price movement to the upside out of the low, guys, in February. In March, we have the beginning of, we have the first kind of correlation here to the agreement or decision between 2 leaders, either that or a merger or acquisition of some kind. So we should hear some news here. There is a male executive, it looks like, highlighted in early March, and something about legalities or legislation or like bylaws or something like that, something legal. There's legal decisions being made, and a merger of acquisitions. There may be some sort of like new route that they take on, some new like industry, or maybe they take a move to expand what their product line and their services line, really, like into other areas, into other industries. But there's talk of it, there's news of it there, and it looks like it probably comes up again in some important way in late May, as well as probably whatever it is transpires in July and August. And you see there after August, there's a unicursal hexagram, so probably a pretty big move there, and then we'll get into it. But for March, we have a big move in the first week to the upside. Actually, in the 3rd week of February, there's a big move higher as well. But in the first week of March, there's a big move higher. There's volatility in early March that ends with a fast sudden move to the upside, and then the price level of the high for March, there's a decline off of that that offers an opportunity to position oneself for into a long position. Interesting. Okay, well, so that decline is pretty extensive. I wouldn't in March. I'm not saying in March buy a long position, but there's a significant decline out of the March high. It looks like into August or May, in probably in May is one of the year's lows. And that would make sense. We have within close proximity to the high, the highest highs for the year. We have the lowest lows for the year, and so by close proximity on the time frame of a 1 year chart reading would be approximately like within 3-ish months, and that would line up really well. We have a critical resistance level that's highlighted around the low, and we have what appears to be a breakout. Or not a breakout, but a rally into late March to hit a resistance level that we fall from with consecutively lower spikes up on the way down. And it looks like that last week of March is where we have a high for the year, so give or take a little bit, roughly. There's another big move in the third week, another big price move in the third week. It's a little difficult to determine, probably to the upside, but it's a little difficult to determine direction there. It could be both, like a swing. And then in April, we have a critical price level that's highlighted around early April. There is a breakout to reach the high here. So there's a breakout to reach the high in March. But then we create resistance and we fall with those consecutively lower spikes up on the way down. Critical price level. So probably the highs like right on the cusp here of this high that I'm speaking of, prominent high for the year, is on the cusp of March, April, because we have this critical price level, technical price level here, and we successfully turn resistance into support at some point here in April. But the rally ends. The rally along a diagonal trend line ends with a fast sudden move to the upside, and then a breakdown through that diagonal trend line with increasing volatility on the way down. I'm advised to open up protection in April as well. Even at the price levels of the low, it looks like we probably go to a lower low in May based on that. And at the end of, I wouldn't buy protection at the low, but that's what it's speaking to, lower low in May. Where I would buy protection is at a crest that we have after out of a decline. There's a move from the bottom of a range to the top of a range. So this will be a prominent low in April, but a lower low in May. And likely after we have a high right on the cusp of March, April. U-shaped dip around the low of April, and then we sell from near overbought territory. We sell from overbought territory on the RSI from an overbought crest or peak in early May. It's a significant decline failure. Mid-May, I'm advised to open up protection. I'm advised to either cash in on protection. Or probably cash in on some protection that I opened here at the cusp, but then it looks like also open new protection. We have a prominent low for the year here in late May, and selling from the behavior around the month's low and the prominent low of May. We have selling from a peak or crest down to and through that same price, or selling, we rally up through peak, rally up through resistance, stay above it, briefly making a peak or crest, and then selling back down through that same price level shortly thereafter. So likely what we see here is a low, we rise up, and then we fall pretty hard and come back down even lower. And then there's notable move to a fast sudden move higher out of the low in late May, and there's also what appears to be a fake out and a prominent reversal there in late May. This all would stand out on the scale of a 1 year chart. We move higher, it looks like, out of that low in May, significantly higher out of oversold territory, and we have a prominent crest or peak for the year in early June. The low of June is a critical price level as well. It acts as critical resistance at some point. And it's a rally that increases with momentum moving forward into the high of June. Matter of fact, I think the June low, or the June high, is probably towards the end of June, because we had bullish price swings in late June and a rally that commences in late June as well. Looks like there's a cash-in opportunity. And don't forget, around that low of May, there's something highlighting a merger, an acquisition, or a decision of some kind that was also highlighted here in March. Now here in early July, again, we have that same decision or more news having to do with the same issue that's highlighted both in May and March. Again, in early July, I'm advised to be cautious around the month's high of July. There's completion of a rally there and a strong decline in late July to reach what appears to be another prominent low for the year. To be clear, my sense is that we've reached the year's highest high in May. And so here we have this cash out opportunity. Looks like there's a cash out opportunity, definitely a cash out opportunity when we push the upper end of a range, and that's on the scale of a 1-year chart there. Advised to be cautious because we fall pretty hard. It's an easily missed high there. There's an easily missed high there, and by the end of July, or maybe even earlier than that, but by the end of July, we're moving pretty hard to the downside. Possibly, it looks like it could possibly be more than just Apple shares that are falling there. And so it looks like there's a crest, an easily missed crest, probably around the end of, towards the second half somewhere. No. There's an easily missed crest in there in July, and from there we fall pretty hard. Decline continues in early August, with multiple headwinds pushing it lower. Again, that same decision or merger or whatever it ends up being is highlighted again there in early August. The decline off of the August high marks a opportunity to open a position, a long position, and it looks like out of the decline we have also, out of the decline that commences from the month's high in August, we have a move higher from the bottom of a range to the top of a range. So it looks like we come back and we probably have multiple failed attempts to break through resistance there, but there's declines off of it that offer opportunity. I'm advised to trust my instincts and my gut here towards the end of August, where we have multiple failed attempts to break through key resistance. And there's a big move out of the low of August, which really may be on the cusp here between June and August. But there's a big move to push the upper end of a range. And then again, highlighted in the end of August, all throughout August really, is that issue or merger. Then we have the unicursal hexagram in early September. At a key support, there's a cash out opportunity, again, a key support there in early September, it looks like, or possibly mid-September. I'm advised to open up protection around a crest there in late August, early September to mid-September. And we fall to a low there from the August high. We fall to a low, a prominent trough or low for the year in late August, it looks like. That price level also happens to offer a good mean point to open up option strategies of strangles or straddles to play both sides of the market. The low of September would be a good mean point for that. And it looks like it's most likely in late September that we see that low. Out of that low, there's also sideways fluctuations with bullish trend that precedes a decline. And then in early October, we have sideways fluctuations with a bearish trend preceding a rally. There's the halting of a bullish trend in mid-October, marked by a sharp decline through key support level, and on the scale of a 1-year chart. There's a decline into the October low that increases with momentum as we move forward into the low, and there's a prominent move on a 1-year chart that would stand out higher in late October, but it's matched by an equal and opposite move, full retracement back down. So it'll go like this, and it'll stand out on a 1-year chart. There's a lucrative trade opportunity there, a cash out opportunity there. As well, in the midst of a decline, there's a move higher from the bottom of a range to the top of a range. It looks like we have another crest possibly here somewhere around October, the end of October possibly. We fall pretty hard from that. Decline really ensues in the second week of November. And we see probably the lowest low for the year here at the end of November or early December. There's a move higher through a critical resistance level, followed by a decline back down through that same price level shortly thereafter. So probably what happens is we have the low here in November. There's a fast sudden move higher in late November, marking the end of a period of decline. We are also capped, it looks like we're bound by the same range as the high that we see here in June. Around June, that high there, we're bound by that same range here as a crest here, it looks like, around the end of November, in November. And we fall back down, it looks like probably somewhere there in December to revisit the same price level that we had in November. In early December, there's 3 crisscrosses through the same price level, confirming a bullish trend, and into the high of the month's high of December, there's a significant move higher that would stand out on a 1-year chart. The month's high of December is also within close proximity time-wise to the low, which is a significant low for the year. And we have selling from near oversold in late December, we have selling from a near overbought crest or peak, pretty significantly on a 1-year. The following year, 2024, we have both either a lower low or the same low, and a higher high or the same high. And it looks like there's a breakout as well that stands out significantly in 2024. When we look again at the 1 year, we have a move higher, pushing the upper end of a range higher out of a low. So there's a high and a low both in 2024. Guys, that's the overview for the year of 2023 for Apple shares. Let me know what you think by hitting that like button. If you want to see more monthlies of Apple, make sure you're putting some activity into this rating. And most importantly, guys, when you make money throughout this year, make sure you're following that rule of karma. If you don't know what the rule of karma is, make sure you check out the video explaining the rule of karma. Matter of fact, there's a couple trade opportunities in here. There's the end of a rally here that marks an opportunity to open up a short position, and then there's something to do with a male ruler and a decline, a strong decline, offering an opportunity at a support level with some negative headwinds. There's another swing trade opportunity in there. The other swing trade opportunity looks like is around a high. I mean, there's more swing trade opportunities, to be clear, but it looks like that's a significant one there, from cash out at a high and ride it down decline. And then there's another swing trade here in late December, 3 crisscrosses through the same price level, completion of a bullish trend, and then again something to do with the emperor, maybe the same price level, maybe the same issue. It looks like off of that price level we move higher to the completion of a rally in that case. And that's Apple, guys. Thanks for watching. Good luck to you. Blessings. And I'll see you on the next one.